So there is something happening now in the market that also happened in the 1920s, in the years leading to the Great Depression. And it seems that we don't learn with history. And as Mark Twain said, history does not repeat, but it often rhymes. And in the 1920s, people were trying to leverage the market because those were the crazy years where the stock market only went up. So what people did was to create some financial engineering, and now we are repeating exactly the same. What they did was to create holding companies. These holding companies will hold shares in other companies, and they will issue bonds to get more shares, to buy more shares in other companies. So they were basically doing what Michael Saylor is doing with MicroStrategy, but instead of buying Bitcoin, they will buy shares in other companies. Because apparently back then, the market only went up. Like similarly to what we have seen in the last few years, or the last couple of years at least, Bitcoin almost only goes up, right? Of course, there is volatility, but the point here is that in the 1920s, they were issuing, these holding companies were issuing bonds in order to get more money, to buy more stocks in other companies, and to value their own stock and attract more investors. So this was like a flywheel, or if you call it a pyramid, where you'll bring more investors, the stock goes up. Because the stock goes up, now they can refinance even more, they can issue more bonds, they can buy more stocks, and is everything a recursive process where everything goes up until one day where it stops going up, right? And this brings me to MicroStrategy, and which changed the name to Strategy, and Michael Saylor. Look, I love Michael Saylor, and this is not what's happening now in the market. The crazy prices that the MicroStrategy stock is not Michael Saylor's fault. Okay, I love Michael Saylor. I've spent hours and hours listening to his videos. He's a great Bitcoin proponent and Bitcoin evangelist. I love what he has done so far. Now, people are getting a little bit blind to regarding what's happening to MicroStrategy, right? The strategy. So MicroStrategy issues bonds to buy Bitcoin, and because price of Bitcoin goes up, MicroStrategy strategy stock also goes up. But the problem is that there is a very large premium, and the strategy price, the stock price compared to its Bitcoin NAV, the net asset value, the market cap to NAV, it has a very high premium. And this premium doesn't make sense from a mathematical perspective. If you want to leverage Bitcoin, you can leverage Bitcoin yourself. You don't need to buy MicroStrategy stock. Now, because somehow people believe that this is a better way to leverage, I don't know. I really don't understand. They pile up into buying more strategy stock, creating this premium. Now, the point is that this premium will disappear. And I want to show you here a chart that I have created. So I created this indicator on TradingView. Let me get out of the way here. I created this indicator here at the bottom on TradingView, which I call market to NAV premium arbitrage alpha indicator. And basically, it's it tells us, we have here in green the strategy stock, and it tells us, like, compared to their Bitcoin holdings, how much is the premium, how big is the premium, or the discount, in this case is a premium, to the Bitcoin holdings. And at the moment, MicroStrategy is trading, or strategy is trading at a 35% premium when compared to the stock price. So 35% is not that much, but the natural state is to go to zero, okay? Because it doesn't really make much sense to have a premium at all. So what I see happening here is that the price, as soon as the Bitcoin price starts to go lower, MicroStrategy price will go lower even faster, will decline even faster, and it will lower this gap to zero, the gap of the premium. So what we see here, for example, when it was around this area, okay, when it was around here, the premium was 100%. And if you short it here, you have done a very nice 30%. If you are leveraged, you'll have done much more, okay? Then again, the premium here was around 80%. And the stock went down, right? And what I think is going to happen, not that I think, I'm almost sure, is that the price will go lower as soon as Bitcoin starts to to shake a little bit, and it will make this premium disappear. Now, I'm not saying that Michael Saylor is wrong or anything like that. What I'm saying is that investors that buy MicroStrategy stock are wrong in seeing like this stock is more valuable than buying Bitcoin itself. So that's what I think. So if you are an investor, I'll be very careful with this. Now, there is a strategy that people can use actually. You can short sell MicroStrategy and buy the same amount of Bitcoin and wait for this gap to close. So at the moment, I'm not doing this because the premium is 35%, so it's not that huge premium. But if the premium of MicroStrategy strategy stock will ever go back to close to 100%, I'm 100% sure that I'm going to do this strategy. I'm going to short MicroStrategy, long Bitcoin, same amount of money. This is called market neutral strategies. And because what we want to benefit from is not, we are not speculating on the price variations. We are just speculating that this gap will close. And that's going to be a pretty clean trade. All right, guys, that's all for this video. I'll see you in the next one.